Hello and welcome to CMC Markets Trading Outlook for the week of August the 3rd, 2015. My name is Colin Sadzinski, Chief Market Strategist. Our focus this week is on interest rates and currency markets. The biggest news we have for this week's they primarily could have a significant interest on trading in currencies, and there's also a number of big central banks meetings this week, so there's a real focus continuing on what could happen with interest rates in a number of countries. Clearly a lot of the focus will be on the United States, where we're coming off a week where we had some significant swings in the US dollar based on changing inflation expectations, and what does that mean for putting pressure on the Fed for its September meeting after they came out of July just solidly right down the middle of the road in neutral, not really wanting to give either side the upper hand. We also have four central bank meetings this week. We have the Reserve Bank of Australia, the Reserve Bank of India, the Bank of England, as well as the Bank of Japan. So, and we also could see a number of swings in markets based around that. There's a lot of data coming out this week. It's the first week of the new month. So, of course, we kick off with the manufacturing purchasing managers reports. We get the service purchasing managers reports later in the week. We get employment figures for a number of countries: Canada, the United States, Australia, New Zealand, and others. So it's a big week also for employment news. A lot of data out there that could potentially move the markets. Earnings season also continues. We start to move down from the biggest names down into the middle tier names. So, but we do also get a flood of earnings reports continuing. So in smaller cap stocks, we may see traders continuing to respond to those kind of reports as well. So I'm going to start the week off with looking at the U.S. dollar index. Actually, here I've got the China 8 shares up. I wanted to just mention something about the Chinese markets while I've got this chart open here. We are seeing that the recent measures and interventions by government authorities in China, whether it's the government or the regulators or the PBOC or whoever, do seem to be stabilizing the Chinese stock market situation a little bit, but it hasn't changed the underlying fundamentals. It hasn't changed the risk that this could have a bigger effect, ripple effect on the economy, and it hasn't changed the fact that these indices remain in a downtrend. This is the China 8 shares that track China incorporated companies that are listed in Hong Kong, and it's still in a distribution trend. It's still in a trend of lower highs. First resistance here is about 11,475. Really probably needs to take out 12,000. So the question remains: is this a base building here, or is this another pause within a bigger downtrend where so we're in this 10,725, 11,000, 11,500, 12,000. These are levels. If this gets breached, you could retest 10,000, or even this low back here around 9,600. If you do get a breakout, 12,390, 12,905, first Fibonacci test to the upside. And similarly here, if we take a quick look at the Hang Seng, we also see that again we've paused here in this kind of 24,000 to 25,000 range, and it remains to be seen if we're in a pause in a bigger downtrend or not. I mean, we're still getting lower highs in the RSI, but we're also getting starting to get higher lows, suggesting that perhaps some of the downward momentum is starting to ease. Either way, we could have some significant moves in either direction depending on which way it breaks out of this range. I'm going to move now over to currencies, and we'll start with the US dollar. The U.S. dollar had been marching forward through late June, early July. It's backed off a little bit. It's trading kind of in a 96 to 98 range here. The big question is, will the Fed start to raise interest rates in September? A recent strong GDP report certainly pointed to that direction, particularly the upward vision to first quarter and the higher inflation figures on core PCE, which is a measure that the Fed uses. On the other hand, on Friday, we had soft wage growth, so that then caused this candle, which knocked the index right back. So through this week, a lot of the U.S. data will likely be seen through a lens of what does this mean for the Fed acting in September. Anything like higher inflation or higher employment that points towards the Fed liftoff in September could boost the dollar and weigh on stock markets, and likewise anything that suggests the Fed may need to hold off could knock down the dollar and boost stocks. Either way, it still looks like the most traders are looking at a September liftoff and 1 to 2 interest rate increases this year, with potentially a second to follow in December. And how is that impacting other markets? Well, we're certainly, if we move over to the euro dollar here, is been pretty much range bound recently. I realize this is a bit of a busy chart, so let's open that up and we'll blow it up a bit here. So we're seeing here June in the early part of July it had declined with the Greece crisis. Once that kind of got resolved for the moment, there's still a lot of diciness there. We've seen it bounce back a little bit, but the rebound's been fairly moderate at best to feeble. We're still seeing lower highs. We're still seeing resistance kick in here at 111.11. This is 110 even, 109.80. Bit of body support resistance here in and around 109.30. And this Fibonacci level here is down around 108.60. So we seem to have gone into a bit of a sideways channel here for the euro. We can't rule out that the Greece crisis could flare up again. The IMF is now saying that they can't support a third Greek bailout without a debt reduction. So does that mean this process is going to drag on for months? Is this putting pressure on Germany to agree to what the IMF has been suggesting so far? They've been stonewalling them. So who knows? But suffice it to say, and on Monday, Greek stock markets are expected to reopen, which could also add another twist to this story. So we could still see the euro dollar get impacted on swings surrounding Greece and the general political issues in the EU, which haven't gone away and which could continue to flare up over the next couple of years. And then on the other hand, how the U.S. dollar moves and euro dollar often moving in reaction to the U.S. dollars. So a few forces playing out potentially this week on euro dollar. I'm going to move now to Aussie dollar, since they are the first big central bank meeting of the week. Here, and we'll bring it up here. And Aussie dollar has been under pressure with weakness in China, where it falls in commodity prices, particularly base metal prices. Recently here, Aussie dollar has been trying to level off a little bit in about this, let's call it the 72.25 to 73.75 range. RSI has also leveled off, suggesting that the downward pressure hasn't started to ease, but it isn't getting any worse either. Just a general steady distribution here for the Aussie dollar. The street is not expecting Australia to cut interest rates. However, I'll show the Kiwi dollar in a second. Certainly the RBNZ is expected to cut. Australia is sitting at 2%. So far people are expecting them to stay the course, and so a surprise would be if we did see a cut, say down to 175, that could spark another down leg for the Aussie dollar. If we see them hold the line, then perhaps we might see this bounce back up a little bit. Maybe up, this was 73.75. This is about 74.25, 75 up here as we try to perhaps move into a sideways range here. Now in contrast, I'll show the Kiwi dollar. I still love this module linking feature, by the way, where I've got my modules linked with these green boxes here, and when I bring one up, it changes all of my charts here. So we're seeing Kiwi dollar had weakened, and here's something interesting, by the way, on the Friday with a number of currencies. 8:30 in the morning, when the U.S. employment wage data came out, which usually gets ignored by the street, came out weaker than expected. People saw that as perhaps there's not quite as much inflation on the Fed, and boom, a whole pile of currencies took off in the subsequent half hour. Now, since then, we're actually seeing Kiwi dollar starting to resume its downtrend again, but I'll show the Canadian dollar in a little bit, and we see the same sort of action going on. So what that means is when data comes out, we could see some big swings in currency markets. The Kiwi dollar in and of itself is getting knocked around quite a bit here. The last round of New Zealand economic data was soft. It was some business survey data that knocked the dollar back. It's bouncing around here in a 65 to 68 trading range. Downward momentum has been easing and it's been working off an oversold RSI, but people are still tentative because the RBNZ may still have to cut interest rates further. So after looking at that, the next major central bank that has a lot of news is the Bank of England, and Thursday actually is a big day for economic news in the UK. We have, in addition to the Bank of England decision where they're not supposed to make any changes, we have their inflation report, the NIESR GDP estimate, and UK industrial production. So lots of news out in the UK on Thursday that could move its markets. We're seeing basically right now sterling is sitting in and around 155.80 within a channel of about 152 to about 159. These are all Fibonacci levels here. But look, we were in a huge downtrend for cable. It's moved up. we're basically consolidating at a higher level. Look at this. We're still getting a nice trend here of higher lows. That's telling me that it's back under accumulation and generally working its way upward. Now, the key for the UK is people are wondering, when are they going to start raising interest rates? The party line has been for the middle of 2016, but the way UK data has been going, that could get accelerated. Also, if we end up with a Brexit referendum in June of 2016, like Prime Minister Cameron has suggested, again, the Bank of England may want to move early to get away from being anywhere around that vote, as they have done with previous big votes in the UK over the last year or so. So and of course, if the Fed moves, then that could also clear the runway for the UK to start raising interest rates as well. So in particular, the inflation report, less this time on focus on the meeting, more of a focus on the inflation report. The Governor Carney has used the inflation report as an opportunity to signal monetary policy trends over the last couple of years. So that's the one people may really key in on. We also have the Bank of Japan this week. And in their case, they're not expected to do anything. They're basically expected to continue their QE program. But there has been one dissenter, and there has been rumblings here and there that they may start to ease back in time and start to taper their QE program. The other thing to watch for with them is defensive capital flows. But so far, that's kind of eased off a little bit, which is why, since the Greek deal here in the early part of July, similarly, we had seen defensive capital flows into the yen, drove dollar-yen down. Now we're seeing defensive capital flows ease back. Dollar-yen has bounced back up towards 124, 124 and a quarter. This is 125 and 125.90. But interestingly enough here, the RSI is still topping out below 60. So even though we've had a bounce, there doesn't seem to be a real burst of enthusiasm either to drive dollar-yen higher. So this could be leveling off here in this 123 and a quarter to 124 and a quarter range. So if we saw any kind of risks pick up, this could come back down, and it also could still be heavily influenced by action in the US dollar over the week. So what we'd watch for with the Bank of Japan meeting, any hints towards tapering, any increase in the number of hawkish dissenters, and any comments on the economy and inflation trending toward their 2% target, which it remains well below then. The last major currency I want to take a look at, and then I'll shift over to commodities briefly, is the dollar CAD, and which we'll bring up here and here. So we had a really interesting day for dollar CAD here. It's been popping up lately, and now it's leveled off in there. It's bouncing around 130 in this kind of 129 to 128.50, say, to 131 range. Once again, it tested 131 and was subsequently knocked back pretty quickly again to hang around 130. So what we had with dollar CAD that was quite interesting, and I've been trying to figure out, could this be a key reversal day or not? As the day progresses, it's looking not, but still looks like we had a bit of a head fake here. Weaker than expected Canadian GDP popped it up to $1.31. Bang, got knocked back right away to 149.29.40. This was on the US dollar weakening. This was CAD weakening on GDP. This was US dollar weakening on the wage data, and now we've seen it kind of bounce back into equilibrium and pretty much back to where it started. So a number of forces still playing out. For Canada this week, we have purchasing managers, but also the Canadian employment numbers come out the same time on Friday as U.S. non-farm payrolls. So this pair tends to, because of the two, when they both come out at the same time, U.S. dollar CAD tends to be particularly active with the interplay of the employment numbers in the two countries. I'll also show gold and oil briefly here. With gold, of course, has been trading a lot against the U.S. dollar lately, as we've seen the gold got hit by a perfect storm of a number of things. We had a strengthening U.S. dollar on speculation the Fed will start raising interest rates. At the same time, we saw an easing in political risks with deal for Greece, deal for Iran, U.S. talking to Cuba, and a whole bunch of things all came together at once to create this perfect storm for gold that culminated in this $50 drop a couple of Mondays ago. Since then, we've seen gold trying to stabilize between about 1075 and 11. 1110, but it's having real trouble getting back above 1100. And this suggests to me that what we're seeing is we've got an oversold RSI. We're easing that off by through a consolidation, but the inability to really drive back above 1100 is still suggests to me that that this could be a pause in a bigger downtrend. And the $1,000 round number is looming, and I still think we could see that get tested at some point down the road as gold continues to weaken here. I'll also highlight crude oil, which also can have an influence on trading in CAD, in Norwegian krona, and in other oil-sensitive currencies. So we had the big sell-off, which we go to a little longer-term chart here. So big sell-off, stabilization, kind of a double bottom. We've had a bit of an initial rebound here that got up above 23 into this 23 to 38 retracement range, topped out in the low 60s, and now it's working its way back down. We've got a pause here in the about the 46.50 to 49.50 range. We're working off an oversold RSI. Remains to be seen if this will this could be a pause or if this is a base. It's too early to call on this one. But recall that that if we do that there is the possibility, though, unless we see U.S. numbers continue to come off in terms of inventories and sopping up the supply, that we could still see this a retest of the low 40s remains a possibility in the coming months. I haven't talked too much about indices today. For the most part, indices remain range bound. I'll just quickly show a couple very quickly here. Just the Dow shows us here that we're kind of stagnant on the U.S. indices, still pretty much going sideways here, still in the middle innings of this mid-cycle consolidation. Looking at the German index here, is bouncing around a little bit here. Had the big sell-off, one rebound, came back, has topped out at a higher low, and seems to have moved into a Fibonacci trading range here between about 11.50 and 11.300. See which way it breaks out of that in the coming days. But the one that is intriguing is the FTSE. The FTSE has been on the rebound lately a little bit here. We'd had it had moved up nicely, had come off between May and the beginning of July. Looks like it's trying to build a base here. We've got resistance here around 68.15, but support here has been moved up from 64.30 to 6,500, and this has been climbing back up towards 6,700. RSI peaking back above 50 suggests that we are in a bit of a rebound phase here for the FTSE. So it's another busy week for trading. There's still a lot going on. The main focus is going to be, I think, on the central bank meetings and on the U.S. data, as people are really trying to figure out interest rate trends for a number of countries. Are some of the countries that have been easing, will they continue to do so? Some of the countries that have been neutral, like the U.S. and the U.K., moving towards tightening, will that continue? So some of the data this week should give us a better idea of which way things are heading, over perhaps through August, and set the tone for trading.